G'day traders, I'm Greg McKenna. Welcome to Markets Morning. My Friday, but there's still a full day of US trade to go, 26th of October. So we saw a decent bounce from stocks in the US and Europe, and of course here in the SPY. But some of that's been reversed after the close with Amazon and Google reports. But it's worth talking about where they are, and I'm going to lead off today with stocks, then Forex, then commodities, and then have a quick look at Bitcoin, which quite frankly is not doing anything. But just quickly around the grounds, the S&P 500 closed at 2705. I think the futures were around the same level, up for 1.86. Futures are now at 2671 after the Google and Amazon results. Intel was out, a couple of others as well, or actually quite a few others. But that's put some pressure on the market. So in many ways, it's kind of a moot point as to what happened. The next big thing is, what are we going to do about it tomorrow? Because it was an inside day. And if you have a look at my Market Morning's written piece, nice quote there, a nice tweet from Tom Basso saying, trend is still down, full hedges still on. It was an inside day. He said it's the first time he's ever seen an inside day up more than 2%, but still, pointing down. So anyway, have a look at that. So what have we got? We've got the NZDUSD up 3.3%, remembering it was down 4-point-something%. That's going to be reversed in futures. We've got the US dollar stronger against the euro. Euro is at 113.72. Aussie's now a tiny little bit under pressure at 70.74. Sterling is struggling a little bit, 128.20. Theresa May is having political troubles at home again. Emmanuel Macron said this morning that they're not far from a deal, and they're not. But the Irish border, the British internal politics is all really weighing on things. Gold didn't do too much, although it looks like it, if stocks go off it, it stays elevated. If not, it looks like it might need a test back towards the sort of the 12.15, 12.20 region, something like that. Oil was up despite the Saudis saying that they think we could be in an oversupplied market in early 2019. Let's dive straight into the charts and we can talk about, obviously the ECB was out, those kind of things. We heard from new Vice Chair at the Fed, Rich Clarida. But let's focus here on this weekly chart of the S&P. What do we got is we have this trend line, February low, then the retest-ish kind of thing. That's what we pulled up last night. So that is the key level to watch, the key trend line to watch in a structural sense. From my point of view, the MACD still suggests we're at least going to retest that low, and probably 25.86 or something like that would be a nice place for things to pull up, and then we'll see what happens. Now, don't forget, buybacks are back next week, so they're going to be important. But the theme of earnings season has been sales misses, profit hits. So that tells you, and then stocks are getting sold. That tells you what traders are focused on. Traders are worried about the US economy. That's why they're looking at sales, not just profits. Profits are easy to engineer, but sales are a different matter. Sales are a function of what's going on in the economy. So I think that's what's hitting them. So let's get rid of that weekly and have a look at the daily. Now this is the daily, very messy chart of S&P 500. So the question you ask yourself now is we've got this low here from 2 days back. Look at the length of the. I'm going to blow that up so you can get a better look at it. Look at the length of this candle. That is ugliness. That is long-tailed ugliness. You know what I think about long-tailed? Trend lines and long-tailed ugliness candles, they bother me. Or I use them a lot rather than bother me is probably a better way to put it. So you've got long-tailed ugliness there and you've got a little bit of weakness. So what does that tell you? That tells you that in the first instance, I'm going to blow that up so I can make more sense of it. So that's an inside day. So in the first instance, we've got a low of 26.58. If 26.58 breaks, things will start to get ugly for stocks. Now, they could break in Europe. They could break because we get a much better than expected GDP, which sees the bonds, which are very quiet at 3.126 for the 10s, back up at 3.20. That could, get things really moving. But we're not going to get too bearish unless that low, which is 26.50 or thereabouts, gives way. 26.50 gives way, then you've got another sort of 70, 80, 90 point fall towards support. So, at the moment, in the first few hours of the 26th of October, you've got, a small downward move. So, not going to over-egg it too much. That's the way it is at the moment. But it does, if I it does still have some solid downside bias, although it is getting towards levels that, I'd probably say we're a bit of caution, that kind of thing. But we'll wait and see, because we've still got a lot of water to flow under the bridge. I just want to show you before we go, this is the S&P, sorry, the SPY 200. This is just what I've put out there. I'm not an Elliott wave guy, as you know. I'm a Fibbo guy and a trendline guy who then uses moving averages and MACDs and all that kind of stuff, right? But for the Fibbo people out there, what about this wave 5? Now, my sense is it's going to be somewhere between 55, 50, and which is a Fibbo projection of this break. 55.50 and 5600 as the low. We got down to a low of 26.15. So we're not that far. This wave 5 doesn't seem... It's a nice big candle, and it doesn't seem to me to have satisfied the end, potentially. We'd have to see the high from last night get taken out. Could happen, but we'll wait and see. Yesterday did look certainly overdone for the local market, but just have a think about that. I can't guarantee it one way or the other. It's just... Pardon me, it just strikes me that potentially that's what we might have. On the 4 hours, you can see 57.33 is going to be resistance in Australia today. If you can get through 33, it may even run another 50 or more points. Could run to 58.49. So, we'll just keep an eye on that one. While I'm here, let's have a look at the DAX. The DAX an inside day as well, it's gone down through 11,000, which was the first target. I talked about that yesterday. If it can get back up above 11,400, it can have a bit of a run higher. We'll keep an eye on that one. That would be my level where if I was trailing stops, I'd probably have them. Well, I am trailing stops, but have them taken out. If it gets above 11.4. In terms of currency markets, let's talk about Mario Draghi. Who'd want his job at the moment? He's walking a fine line, is Mario Draghi. He said last night that momentum was slowing within the EU economy, and then he talked about inflation and core inflation lifting and those kind of things. It's a hard case to make. The ECB clearly wants to end QE, and that was a signal that they sent the market last night. That got euro up to about 114.30.40, maybe 45 or something like that, before it collapsed, and it's now down at 113.72. So that old support is now resistance. That region there, 114.30, 114.50. And I think the sellers will be there. Unless GDP tonight's really weak, which of course it could be. You never know. This is the advanced data. It's data as at the end of September, and we're only at the end of October. So a lot of numbers will be implied. That could actually bias it strongly if they're implied based on momentum from the previous quarter, but equally, if they're implied based on seasonal factors, who knows? So keep an eye on that. That's going to be big. My sense, though, is still 112.80 to 113 is the target. And then if that breaks, we're looking at 108 or something like that. In terms of dollar yen, it didn't move too far up because it didn't move too far down. And this trend line continues to support. That's the level I'm watching. We either take out, I'll blow that up so you can get a sense of it. We either take out that fractal high there, which is 112.88, or we come down below yesterday's low. And noting I'm still using that low even though it didn't close below the trend line, or particularly because I'm using that. So 112.39. So that's your range. That's not right. 111.81, I should say. So that's your 100 odd point range for dollar yen. In terms of sterling, 126.60 seems to be the attractor at the moment. We've had a double top here. We've rolled over. We've broken a trend line. We've taken out that low. If you just want to call that a range, 129.20 to let's call it 133. It was about 122. So that's 300 points. Take 300 roughly points off that, you're in the 126s. So I'm looking for 126.60, just a full round trip for sterling. It would be really good if some certainty for Brexit could come back. Good for business, good for the population, much better than uncertainty. And a hard Brexit. I just think it would be debilitating for the economy. and for business and consumers. So I'm not sure anybody wins from a hard Brexit. There are losers, obviously, in a soft Brexit, you know, depending on how the deal is done and all that kind of stuff. But I'm not sure anybody wins in a hard Brexit, certainly not in the short term. The idea that, you know, pharmaceuticals, food... Anyway, I'm ranting. I'll shut up. Sorry. Right, what have we got? So the Aussie is doing better on the crosses. It's down at 160.69 in Euro Aussie terms. And that's on the basis that copper's holding in really well. Iron ore's through the roof. Coal is pretty solid too. And, you know, and as I say, copper's holding. So the interest rate differential suggests the Aussie could be 50 points higher in the 2 years. So you look at that, you say, well, heck, the Aussie's actually doing pretty well at 70.70 and holding above 70.40. Now, it's still my contention that if 70.40 breaks, it falls off a cliff. But 70.40's got to break first. In the meantime, it's holding in. And so that's the level I'm watching. If it gets up through 71.30, it could run. But of course, we just have to wait and see how the US dollar goes. It's the US dollar keeping its foot on the Aussie's head at the moment. If the US dollar weakens for some reason, like a weaker than expected GDP, then the Aussie can have a good 50 to 100 point rally, I would have thought. Right, what have we got? We've got the US dollar doing its bit on the CAD. Now, it's still my contention that it's got to break that fractal there, which is 131.30, but a break of 131.30 can see it run. You know, you look at this trend line, it's supporting. You look at this channel, it's resisting. Normally, I'd look at that and say, hey, the break's going to be south, but I'm respecting both sides of this unless or until they break, and that's the way I'd certainly play that one. In terms of the Kiwi underperformed a tiny bit last night. Aussie was up about 0.2, 0.3. Kiwi was down about 0.1. But you can see, all things relative, it's not really done anything. Bit of an indecisive day yesterday. So for me, I'd use that as my short-term bias. 65.43, 44. If that breaks, it can run. And if 65.01 breaks, it can, let's call it 65, breaks, it can run. So there's a 45-point range. If you drop down to the 4 hours, you'll see that, you know, you could probably, you know, trade through that as well. But overall, still in a little bit of a downtrend for Kiwi. Looking at gold now, 12 minutes, get the skates on. That looks to me like, I'll blow that up so you can get a better sense of it. That looks to me like it's just hanging there. Thanks very much. Had a good run. Let's time for a beer at the end of the week. And so my sense is that on that basis, if gold trades down and through 1,228 bucks, let's call it 1,227.50, it can definitely fall back to my 15, which is 12.21. And probably back to my 30, which is 12.14. So in that sort of 12, you know, I said 15 to 20, but in that range. So there's, you know, maybe, you know, $7 or $8 to be made if it takes out last night's low. Of course, if stocks collapse and it takes out last night's high, well, then it's 12.52. But it does look a tiny bit tired there. In terms of copper, drifting down, you know, it's still going okay, all things considered. At 274.85, it's actually doing okay. So for me, it's still the same story. I didn't get overly bullish up here in the 80s because it didn't break 86.5. And I'm not going to get bearish down here unless it breaks sort of 71. So that's my story there. It's in a range, and you'd have to go down. You'd have to be awake at night in the US and be trading that time zone to be worrying too much about that. Now, the OPEC... what do you call it? It's not the energy minister, but the OPEC rep for Saudi Arabia was worried about oversupply next year. Talked about inventories being built and that sort of stuff. And of course, we know that there's been, 24 million barrels in the last month, I think, increase in the US. So if I was to just do this, nice and simple, to be consistent with what we always talk about, let's just say... Should be there, big pardon. How's my eyesight? Yeah, it's not too bad. So I've got resistance up here and then support down here. They're the two levels I'm watching. Overall, 64.5 to me seems the most likely outcome while below that trend line. If it breaks, then you can get a bit of a steeper run. In terms of Brent, similar story. I'll move that old trend line and we'll just whack it there. Similar kind of story. So you've got, if it breaks through there, you can get a bit of a run if it takes out that low. At the moment though, you know, the last couple of days, you know, that's a nice little pincer move there and it's got up above it. So I wouldn't rule out, pardon me, a run up towards sort of 78.40 within this downtrend. It's at 76.69 at the moment. So we'll see how that one plays out. I didn't talk about Chinese stocks. I just use China A. So still a lot of confusion on global stock markets, is volatility. And one of the things that bothers me about stocks right here and right now, and I wrote this yesterday, is there was no obvious catalyst for the selling over the last couple of weeks for this market funk that we got into. Yes, sales are down relative to expectations, even though top line's hitting. But the thing is, bottom line, I should say, even though that's happening, that feels like an ex-post kind of rationalisation of the selling. It's got into people's head that that's a theme and all that kind of stuff. But if that is the theme, and if we do get through this earnings season, you know, we're seeing some pretty good beats on profits, just not on sales. So that tells you the way people are focused. Midterm elections, it could be that, you know, generally after the midterms, we have a rally. Buybacks, we've had a blackout, so maybe they're going to come back. Maybe the Chinese government's going to continue to support their stock market. Maybe that's going to help. But really, we've got to watch the NZDUSD and the S&P, what's happening with the FANGs, and how that plays out as to where everything goes. Bitcoin, short and sweet, not going anywhere, waiting for the next shoe to drop. So that's it from me. GDP tonight in the US is monstrous. Very, very large. Last night we heard from Mario Draghi, still going to end QE, still going to hike rates next year, but we are worried about growth. Growth is the thing that worries macro markets right now. As you can see by the focus in stocks on sales, not profitability, people in the US are worried about growth as well. Now that sets up tonight's GDP as a monstrously important number because that's what people are focused on. So if we get a weaker than expected number, all heck could break loose. And if I just have a look here, we're looking for, or Reuters survey is a deceleration from 4.2% last time to 3.3% this time. Any bigger number than that, that could be really quite positive for the US because it will reinforce that the Fed is on track to hike. So keep an eye on that. That's a big number. But that's it from me. I'll be back on Monday. We'll look at the weeklies. And I will wish you the best in your trading for the next 20 odd hours. Have a good one. Bye for now.